Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Monday. These are the stories that set your agenda. US stock futures point to gains at the start of a week, which will see results from Nvidia and long-delayed updates on the US economy. Bitcoin steadies after wiping out all of its gains for the year. President Trump ramps up pressure on Russia by backing proposed Senate legislation to sanction countries conducting business with Moscow. Plus, Boeing says getting it right at pace is better than going fast as it looks to ramp up 737 production next year. We are live at the Dubai Air Show, where we will be speaking with the CEO of Boeing Defense. So it was a choppy week last week for equity markets. Ultimately, you ended up with very modest gains on US stocks and European stocks by the end of the week. On Friday, you did see losses of around 1% for European stocks. But again, by the end of the week, for the week as a whole, you did see very modest gains for European stocks. Today, futures in Europe pointing lower by about 0.1%. Here in the UK, the FTSE 100 is down just 10 points, pointing lower by 10 points. Of course, the politics and the uncertainty around the budget continues to be in focus, and the gilt markets as well, on any new lines being floated ahead of November the 26th. US futures currently pointing up by 0.4%. Nasdaq 100 futures looking to add 155 points. Of course, the big one when it comes to the earnings story is Nvidia, dropping, of course, on Wednesday, those earnings. Let's flip the board and have a look across asset markets now, fading their bets for a December rate cut from the Federal Reserve. Mixed messages, of course, from Fed officials, and currently traders pricing in less than 50% chance that the Fed goes in December. The 10-year currently at 4.14, largely unchanged. Stability across the Treasury markets in the session today. Euro dollar at 1.16, down 0.2%, and dollar strength in the session today is part of that story. But the single currency under a bit of pressure so far in the session. Oil falling as well, down 0.9% on Brent at $63.83 on reports that there is a port reopening over in Russia. Maybe some more oil on the markets. And Bitcoin then, after having lost all of the gains year to date in the session today, modest upside of around 1.8%, but in the context, of course, that the gains for the year have been wiped out. 95,000 right now on the biggest cryptocurrency by market cap. It's red on the screen over in Asia. Let's cross over to Winnie Su in Hong Kong. Winnie.
Morning, Tom. Like you said, not the best way to start our week here in Asia, as we see MSCI Asia down a bit, slightly less than 0.5%. And the losses were mainly dragged by stocks in Hong Kong and China, as you can see here, mainly because of that lower sentiment as the escalating tensions between China and Japan continues to roll. And we can see that it really translates into what's going on in the Japanese markets today. You see that the overall benchmarks are both lower with the topics, the broader index topics actually even lower. And that's because how China has cautioned its citizens not to travel to Japan and its students in Japan to continue to monitor the security problems going on in Japan. And that is coming after how the Prime Minister of Japan, Takaichi, said that, commented about the issues around Taiwan. So the tensions are really escalating and ramping up pretty quickly. Now you've got China's state media actually saying that China is ready for any substantial countermeasures, and Japan is actually sending its senior diplomat to the country. Now you can take a look at some of the stocks that were really under pressure, for example, the retail names and the travel names, because China really accounts for a big portion of Japanese tourism. And here you can see that the department stores Iseta Mitsukoshi down more than 12%. Oriental Land, the operator of Tokyo Disneyland, also down more than 5%. On the other hand, also for some of the names outside of Japan, the travel stocks in China were lower, and also the defense names in China were stronger just because of the escalating tensions between the two countries.
Okay, tensions between Japan and China, a story to continue to monitor. Winnie Su in Hong Kong with a check on the Asian markets as well, and how that geopolitical story is feeding into the equity moves. Meanwhile, Boeing factory workers in the St. Louis area voted to accept the company's latest 5-year contract offer, ending the longest strike at the plane maker since 1948. This as the company has recently started production of the F-47 stealth fighter for the US Air Force. Bloomberg's opening trade anchor, Guy Johnson, is at the air show in Dubai for us. Guy.
Good morning, Tom. Yeah, things are warming up nicely here. It's going to be a really interesting show in terms of what we are likely to get out in terms of orders. But what you are probably going to see at this show as well is a bigger focus on defence, probably a much bigger focus on defence than we've seen over the last few years. And on that note, we're joined by Steve Parker. He is the head of Boeing Defence, Space and Security. And he's now got the job on a full-time basis. You were interim for 9 months. Fantastic to get that under your belt. So congratulations on that.
Thank you.
Steve, the workers are back. They're coming back, I understand, overnight. The strike is over. The 15-week strike is over. Tell me a little bit about kind of the process of getting that factory up and running again. Kind of what is the timeline? How quickly does it happen?
Thanks, Guy. Well, first off, look, it's just great to have the team back. They're the best in the business, building our fighter aircraft in St. Louis. So it's really, as they come back in today, going back through recertification work, making sure we've got all the quality standards right, and then we'll get them back on the job. But really, really pleased the strike's over with, the dispute. And just excited to get the workforce back in and get them doing what they do best, which is building some of our most advanced systems in the world.
Is there a kind of, when we've seen other strikes finishing, there's a kind of long recertification process that has been an issue and has slowed things down. Any issues with that kind of thing?
No. It's again just a very measured approach. Nothing is more important than safety and quality. So just making sure people are refreshed, we're good to go, and then we'll get them back onto the job. So take a couple of weeks, but no impacts there.
You've had a couple of clean quarters now. You've got a strike that's over. You've got a big order under your belt. It's starting to feel like a different Boeing defence business.
Well, it's early days. Pleased with the progress so far. It's very simple from my perspective. It's really about our customers. So driving discipline back into program management, our engineering resources, making sure we're looking at risks, looking around corners. So it's been a good year. The team's stepping up.
But do you feel the last few years have been difficult? You must feel that this business is on the front foot now.
Well, definitely, to use a bit of a cricket term, definitely on the front foot. And again, I think you're seeing some confidence come back in, but again, just discipline, making sure we're for the new work that we're winning, we're bidding it the right way, so we can execute with scheduled margin, technical margin. But I like the progress, and I think there's going to be more to come.
More to come. Okay, let's talk about more to come and what comes next. You've got the F-47. So where is the F-47 now? I'm told you're building it.
Well, that's what the Air Force have said, so I guess I can confirm that now. But I mean, the F-47, this is the F-22 Raptor replacement for the United States Air Force, which is, Boeing, Lockheed products, amazing aircraft. This is the next generation of stealth, performance, survivability. Highly classified, so not a lot that I can say. But what I will tell you is that we invested in advance of this win. We're building new facilities in our St. Louis, Missouri and Mesa, Arizona areas. Billions of dollars of capital going in here to position us to be able to execute, and it's just head down execuation right now, working very closely with our customers.
Was the Super Hornet the last kind of ground-up aircraft that Boeing new aircraft built?
From a fighter perspective, yeah. So again, this is just the next generation. We do a lot of work in the classified spaces that people don't see. And again, we've got our T-7 Red Hawk, which is really a clean sheet training aircraft, which will train every US Air Force fighter and bomber pilot. So I think F-22, the F-47, B-21 and so forth.
So the learning curve in terms of building a new aircraft, I haven't done it for a while though, how steep has it been?
No, I think this is just what we do. So you think about the T-7, the MQ-25 Stingray, both new aircraft that we're building right now in St. Louis. At the same time, we developed the F-15EX, a major modernization effort on the F-15. Actually, developed a lot from Saudi and Qatar with their investments on the F-15 over time. Same with our Block 3 Super Hornet. So it's just what we do. And our heritage in St. Louis is we've had 2 or 3 production lines going at all times from a fighter perspective. So again, not taking anything for granted, but a really good, strong start.
I'm sure you probably know where this conversation is going next, which is FA-18 replacements, which is kind of the next one on the block, as it were. Have you got the capacity to do both?
Yeah, it's a great question. We get that question a lot in the US. Yeah. So what I've told folks is, look, when we bid both these programs back in the day, it was with the ability to execute both. So Our capital facilitation we put in place is for both programs and other programs as well. We're already staffed up. And again, Boeing has been investing in digital engineering and digital manufacturing, so we're going to design and build much differently. The very fact that the F-47 award was in March of this year, and we're now building the first aircraft that the Air Force has revealed is unheard of. That would normally be 3 to 5 years.
Sure.
So, I feel very confident. We're not going to bid things if we can't execute them. So,
is there any overlap between the programs? Like, is there an advantage in doing both?
I'm sure there is, but nothing that I can talk about on the TV at the moment.
Okay. You talk about kind of how things are evolving and the pace, the cadence at which things are moving at the moment. Is the ecosystem changing? Is the nature of what you do changing in terms of the speed at which things need to happen? We're certainly seeing that coming out of some of the conflicts that are live right now. The pace of evolution is much quicker.
Yeah, I think it's a great question. It's really about how do you take what we're learning from as the threat changes, how do you get that back into our systems and then push them back out? The war in Ukraine, the unfortunate war, we're seeing a lot of that learning coming in. And again, from a Boeing perspective, we're doing a lot of work with non-traditionals at the moment. Yeah. So I would tell you,
by that you mean kind of companies like Palantir and people like that are coming into the space.
Palantir, so we're teamed with Palantir. We just made that announcement recently, using their Foundry system. So again, taking what they do best on the AI perspective, getting to our legacy systems. We're also working with folks like Anduril on our ground launch small diameter bomb. They're making the solid rocket motor for our supplier Saab. So we're having lots of these conversations. As my perspective here really is that I want to see what is out there. What's the best of the ecosystem? Small to medium enterprises, non-traditionals, large traditional primes. Bring it all together, because at the end of the day, it's really about satisfying our customers' most pressing problems.
But is the nature of it changing? There's a lot of companies coming out of Ukraine now. The pace of evolution there is dramatic. Drone companies, anti-drone companies. This kind of technology that is evolving super fast. Are you thinking about the way you are going to evolve the business differently as a result of the pace change?
Absolutely, absolutely. It's a great point. And that's where digital engineering comes in. We're able to iterate designs real time right now, pushing software into the products real time, through the air, over the air system. So again, we have to change along with, as the threat changes. But at the end of the day, it's really about promises made, promises kept at the end of the day. So that's my big focus.
In terms of resources, have you got everything you need? Patriot systems, let's just talk about those. You built the seekers for those.
I do.
Huge demand. Over the last year, and a massive pickup. Can you keep up with that kind of demand? Is there anything you're short of? I talk to the civil guys, they are constantly talking about supply chain concerns. Is that represented in the military side of things as well?
Yeah, that's, the Seeker which we build is kind of like the brains of the Patriot missile. And, a great example here is last year we built a new facility, 40,000 square feet additional facility, because we saw a demand coming well before the customer talked to us about it. So this is the difference the Boeing company can make. The scale, 170,000 people. We build large facilities. We come up in rate into very, very high rates. So this Seeker is going to triple in terms of our deliveries. So it's really about capitalization, facilities, tooling, the supply base, to your point, making sure we bring the supply base with us. And then it's people. And we're already starting to train folks up. So I feel really comfortable here. We're going to be asked to stretch, and we're going to be ready for it.
Okay, I think we've done security. I think we've done defence. Let's just quickly wrap things up on space. Tick all the boxes.
You got me.
Where is the space business going? We're starting to see consolidation. It's happening in Europe. What do you think the future of the Boeing the sort of space side of things looks like? Not now, but in 5 years' time. Is the business going to evolve and change? Do you see other partners coming in? Do you see yourself working with different partners? What's the future of the crewed cabin stuff and all that? It feels like, again, things are moving fairly fast.
Yeah, well, you get me excited just talking about this, the way you're talking about it, guy. I would say it's already evolving. If I looked at national security space, which we're a market leader, I think we're right up there. We've got the large satellite space covered. A lot of that's commercial. A lot of it's defense, highly classified. But we've gone to a small sat through our Millennium Space Systems business, where we can put out large numbers of these small sats, different price point, capability. So we're already starting to think through where's the market going to go in the future. On the civil side, with our work with NASA, our Starliner, we're getting ready right now for another flight next year. NASA's manifest suggests April. And we're just coming through all of our testing, making sure all the fixes we put in place are good to go, working very closely with NASA. And we've got the Space Launch System coming up, Artemis 2 flight, looks like February. Again, just going through that whole process. What we're thinking about now is If NASA wants us to go, do we do more than 1 a year? Could we go to 2? Where would we take it?
Can you see that?
We can do that. So it's really just a conversation and making sure that we lay the timeline in, we work out what people, resources we need, and bring the supply base. It's really a question of the supply base and how we put the demand signals in and how we help the supply base come up to speed.
Great to catch up, Steve. Thanks for your time this morning.
Pleasure.
Genuine pleasure.
Absolutely.
Nice to see you. Steve Parker, the CEO of Boeing Defence Security and Space, joining us here at the Dubai Air Show. Tom, back in London, over to you.
OK, really interesting conversation around defence and space tech. Guy Johnson at the Dubai Air Show. Guy, thank you. Got plenty more, of course, in terms of interviews that Guy will be bringing to us throughout today and tomorrow. Next hour, we're going to be joined by Joby Aviation CEO Joban Bevir. So stay tuned for that conversation as well from the Dubai Air Show. Here's what else to think about the week ahead, though. Wednesday, it is the big one on the earnings front, dominating, of course, the tech space, but the broader markets as well. Nvidia earnings coming out on Wednesday. We'll preview those for you and break them, of course, on the day and get reaction to that significant earnings story from Nvidia. And also on Wednesday, on the macroeconomic data front for the UK, inflation data, so UK CPI dropping on Wednesday as markets increasingly bet that the Bank of England will go with a rate cut in December. We'll see how the inflation story ties in to those forecasts and assumptions. And on Thursday, we get the delayed non-farm payroll jobs print from the US for the month of September. So significant in terms of the data front on the labour market of the US and how that ties into expectations around the Fed and whether or not it can go with a cut in December. Coming up, Donald Trump signals he will back a Senate bill that could impose 500% tariffs on buyers of Russian oil. We will have the details for you next. Plus, as Bitcoin erases gains for the year, we're going to discuss all things crypto with Elliptic CEO Simone Maini. We're going to have that interview for you later on in the show. This is Bloomberg. Well, in his strongest indication yet, President Donald Trump has said proposed Senate legislation to sanction Russia's trading partners would be, quote, OK with me. Joining me now is Bloomberg's chief Asia correspondent, Ros Madsen. Ros, at moments like this, I always have to question how much weight we should put on these comments from the US president, how much conviction he has behind them. What is your take as to whether or not this is a significant adjustment in terms of the position from the US president?
Well, that's right. He can be quite changeable on this issue, depending really on where his mood is at with the Russian President Vladimir Putin, because he's swung quite a lot on that question. But he does seem to be in a mood of frustration still at the moment with the Russian leader. Clearly that Vladimir Putin is dragging the chain on any kind of push towards a ceasefire, let alone a proper peace deal in the war against Ukraine, that Putin shows no inclination really to try and end his war and no desire to do so. So perhaps a sense of frustration coming in there. And we know that Donald Trump has been OK, for example, penalising India for its purchases of Russian energy. Now he's indicating perhaps other countries as well, including Iran. But the big one in all of this would be China. And there he has another thing to keep in his mind, which is his desire to have that slightly warmer relationship with China, have the trade relationship on a better footing. So he's been quite reluctant to look at China when it comes to purchases of Russian energy. He's been willing to ding India, at least that's for sure. So that's also a really big question. How broad would he be willing to go with this? And is he willing to take on China with this issue? Again, it depends just how frustrated he is with Vladimir Putin. I mean, obviously the economy in Russia is on a war footing. Production has been helping it keep going. But underneath all of that, the economy in Russia is quite fragile and certainly has taken a big hit from this war and all the sanctions, and cutting off the income for Russia from the energy side, again, particularly a big buyer like China, could have an impact on Vladimir Putin. Whether it would persuade him to change course on Ukraine is another thing entirely, because he has shown himself to be very willing to tolerate a lot of pain for the Russian economy in order to continue his war.
So, Ros, when could this legislation that appears to be getting some backing from President Trump, when could it likely go through Congress, go through the House, the Senate, and finally get to the president's desk? What kind of time frame are we looking at?
Well, that is the ultimate question because it's been sitting there for a while. I mean, the Senate Majority Leader said last month the legislation is ready to go, although he himself said he's not pushing necessarily to get a hard date for it. Again, it depends really on Donald Trump. Does Donald Trump give the green light and say, I'm now willing to sign off on this legislation and put it through? Does he say, I won't object to it if you do put it through? How strong is his endorsement? But we haven't heard from Donald Trump either any sense of a date to vote on it. He gets a bit close and then he seems to waver again because does he really want to go that far with Vladimir Putin? What happens if he does? Does he still want to leave open the option of continuing to have dialogue with the Russian president, perhaps claim that he can bring an end to the war in Ukraine? So there's no set date for this as yet. It does seem to be ready to go when that date is given, but it's been sitting in the drawer already for quite some time.
OK, Bloomberg's chief Asia correspondent Ros Mattson, thank you for that update. Now to the markets where Bitcoin is finding a floor after hitting its lowest level this year amid a sell-off in risk assets. Let's bring in Bloomberg's Valerie Teitel right now. What is happening with Bitcoin then?
Well, look, speculative assets, frankly, have not had a good few weeks. Even the NASDAQ is down some 5% from all-time highs just in late October. Now we have Bitcoin really leading the charge here, down 25%, Tom, from its highs on October 6th. It went from 125K to now trading sub 95K, and it's lost 600 billion in market cap over that time. Now, it has been a hard time for these more speculative assets. Some are tying this more to macro themes. We've had a hawkish Fed decision, some rebellion from some more hawkish leaders really wanting to put the Fed cut in December in doubt. That obviously leading to some struggle when it comes to tech stocks and when it comes to Bitcoin. The other thing I want to tie in here, though, as well, is we've had a creep higher in funding rates, in repo rates. And we've had a Fed on the sidelines not really wanting to intervene. And again, that is just not a backdrop where you see speculative assets like Bitcoin perform. However, there is another risk event on the horizon. We do have those Nvidia earnings coming after the bell on Wednesday. It would be very interesting to see whether Nvidia comes out with a beat, because that could put some of this fears around tech stocks and Bitcoin to rest, at least for now. OK, Val, thank you very much indeed. Bloomberg's Valerie Teitel on Bitcoin and the lead up to Nvidia. Later this week, coming up, how global protectionism is challenging the rise of clean technology, but could actually help poorer nations make the transition. Details next. This is Bloomberg. Well, the global rise in protectionism is having a big impact on the energy transition as trade barriers go up. With me now is Matthew Hales, a trade and supply chains analyst at Bloomberg NEF. So, Matthew, great to get you around the set. Just talk to us about what the US trade change in terms of trade policy, what that is having, the impact it's having, particularly on importers of green energy.
So, I mean, tariffs are really a two-pronged thorn in the side of anybody trying to import clean energy equipment into the US this year. And the first thing you have to consider is the cost. So if you're importing a solar panel, on average, you're now hit with a 15 times higher tariff bill than you were last year. The second thing to consider is that the kind of tariff that you pay is made up of a bunch of individual measures, all of which have been shifting, and there have been setbacks and changes from the government, the Trump administration, which means that there's a lot of volatility and uncertainty for project developers. All in all, that's going to be a knock-on for the amount of clean energy that could be deployed this year. What else is happening beyond the tariff impact that is grabbing your attention right now in this space? The other kind of thing that we're looking at in the US specifically is ramifications from kind of China's export controls, what that impact will be, and kind of the control around rare earths is something we're taking a look at. OK, so the rare earth impact as well as China modifies some of its exports controls on the back of that, at least for 12 months, and we'll see how that changes. Matthew Hales, thank you very much indeed in terms of some of the adjustments made as the impact of trade barriers, of course, in terms of the clean energy sector from our Bloomberg NEF team and analyst there focused on trade and supply chains. Coming up, UK home sales slumping at the top end. We get the details. This is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Monday. These are the stories that set your agenda. US stock futures point to gains at the start of a week which will see results from Nvidia and long-delayed updates on the American economy. Bitcoin steadies after wiping out all of its gains for this year. President Trump ramps up pressure on Russia by backing proposed Senate legislation to sanction countries conducting business with Moscow. Plus, new data finds that sales of the UK's most expensive homes plummeted last month in the wake of speculation about higher taxes in the government's budget. We're going to bring you the details. Let's get to the markets, though, right now. Bit of a choppy week last week for stocks, which ended broadly in positive territory, modestly so. European markets were down 1% on Friday, but for the week, eked out some very modest gains. Today, European futures pointing lower just by 0.1%. FTSE 100 futures off by 9 points. US futures, as we mentioned in the headlines, pointing to gains of 0.4%. The countdown to Nvidia earnings that drop on Wednesday, and the macro data as well, with jobs and inflation out of the UK. Nasdaq 100 futures pointing to gains of 169 points. Let's flip the board and have a look cross-asset. Treasuries largely unmoved in the session today. Markets pairing some of their bets around whether the Fed will go with a cut in December. 4.15 right now in the US benchmark 10-year. Euro dollar at 116. The single currency down 0.2%. Brent and WTI under pressure in the session today. 1% move or lower for Brent at $63.76. So watch the energy sector at the open at 8 a.m. UK time. And Bitcoin, as we mentioned, stabilising up 1.6%, but pairing all of its gains a year to date. Just below 95,000 right now for Bitcoin. Now to the UK, where sales of UK homes worth at least £2 million plunged 13% in October, year on year. It's the sharpest drop in 2025. This, according to data from property website Rightmove. The moves and the numbers come as speculation builds, of course, about the introduction of a mansion tax, a so-called mansion tax on high-value properties in next week's budget. Let's bring in Bloomberg's Kit Rees then for the details on this. So, Kit, just put us into context. 13% drop in terms of the monthly numbers out of Rightmove. How significant, how much pain are we seeing at the top end of the housing market here in the UK?
Well, we're seeing quite a lot of pain, to be honest. There's a lot of caution in the market, and this is especially true in London, given in the capital there's a high amount of very expensive homes, and it also adds to growing evidence of a sort of cooling. So our colleagues have previously reported, as an example, that one luxury apartment was sold at a 50% discount.
Wow.
So, yeah, there's a lot of pain, there's a lot of caution. So as we saw last week, it's very important for Chancellor Rachel Reeves to keep MPs on side, and that's what we saw with the U-turn on the planned increase in income tax hikes. So it's politically more palatable to tax wealthier individuals. So this is what we're seeing with the mansion house tax that's been reported as one of the measures that she is considering. Also, another measure is a charge on wealthy individuals exiting the UK. So taken all together, this isn't surprising that there's a lot of pain at the top end of the market, especially, but it's also been widespread, and it's something that we've seen all year. But with a budget just next week, it's looking particularly sort of nervy.
OK, so the budget is a major factor in this story. And you talked about the broader market. What is happening? This is not isolated just to the tippy top of the UK market. This is a broader phenomenon as well in terms of lower prices.
Yes, definitely. So the Rightmove data also show that there's been a broader slowdown, and it's something that we've seen in all year. We had higher stamp duty charges which have hit buyers. They're dealing with a cost of living crisis which squeezes affordability, and of course with the budget there's lots of nerves over what taxes could be introduced. Going to get higher taxes, so it's kind of keeping sellers, you know, they're not sure whether to sell now, sell later. Buyers also not really sure whether to, you know, go now or go later too. So overall, there's just a lot of caution. There's caution over interest rates as well. We don't know what's going to happen with the Bank of England, and interest rates are quite high in the UK compared with other places. So overall, it shows that there's a lot of caution, there's a lot of uncertainty, and this is being played out in the UK housing market.
OK, excellent. Kit Rees, thank you very much indeed, co-editor of Bloomberg Markets Today. Staying in the UK then, the government is set to announce an immigration overhaul which could curb asylum seekers' access to housing and financial support. The wait for permanent settlement is likely to be extended to up to 20 years, with status reviews every 30 months. The tougher rules come with the Reform UK party continuing to hold a commanding lead over Labour as immigration pressures remain at the forefront of public concerns. And investors are getting new insights into the holdings of the world's biggest stock pickers with the latest 13F disclosures to the SEC, the Securities Exchange Commission. Charlie Wells has been digging through the data, as he does every time these drop, and is here with the latest. Charlie, what do we know about the filings then? What do they tell us about big investors and some of their moves?
Good morning, Tom. So this really is all about positioning in tech. If you look at the heaviest weighting that we're seeing in these 13F filings, you see about 25% to tech, followed by about 8% for financials, healthcare, consumer discretionary. And what we know with these filings is that investors who manage more than $100 million are required to file them to the SEC 45 days after the end of the quarter. So this is for the third quarter. If you look at the NASDAQ, if you look at some of these tech stocks over this period, you see that upward trajectory. But again, that period was really marred by questions about how much room this rally had to run. We see questions like that showing up in these 13F filings.
Charlie, what about some of the themes emerging when it comes to individual stock names in these investor holdings?
Yeah, well, Tom, I've got some winners and some losers for you. Bloomberg has gone through some 909 filings for hedge funds in particular. We've seen some big increases in allocations as far as market value. You look at Nvidia up $11 billion in that third quarter. Other tech names, including Alphabet and Apple. Let's bring up some of the losers, however. Losers as far as market value in that third quarter. You've got CoreWeave, that sales software provider, down some $6 billion, followed by other tech names. And so the fact that the winners are tech names, the losers are tech names, gives a sense of how this market, how the questions about this market's trajectory have been going. Let's look at an individual portfolio. We'll end there with Berkshire Hathaway, of course, headed by Warren Buffett. You can see again here that similar theme. So building up almost a $5 billion stake in Alphabet, but then trimming Apple by some 15%.
OK, Bloomberg's Charlie Wells on those 13F filings and the stories that they tell. Charlie, thank you very much indeed for breaking that down for us. Now to some other stories making the news. This Monday, US President Donald Trump has continued making sizable bond purchases this autumn, including debt from companies affected by his administration's policies. New ethics disclosures show at least $82 million in transactions, including from Netflix, Boeing and Meta, along with bonds from US cities, school districts and hospitals. No sales were reported in the disclosures. And President Trump says House Republicans should vote for the Justice Department to release its files on Jeffrey Epstein, effectively reversing a position he'd held for months. Trump has been under increasing pressure from some of his own Republican Party members to release the investigation materials on the disgraced financier who ran an underage sex ring and died in prison in 2019. Trump posted on social media, "We have nothing to hide and it's time to move on." Switching focus, German Finance Minister Lars Klingbeil is heading to Asia, pushing for, quote, open, rules-based trade as tensions rise between the US, China and Europe. He's going to take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore and press for fair competition along with better market access for German firms. And the chief executive of Deutsche Bank, talking of Germany, is set to unveil his strategy for the next 3 years this afternoon. Analysts are expecting new financial targets, but few changes to the overall strategy. Let's get more on what to expect with Tom Metcalf, Bloomberg's managing editor for EMEA Finance. Tom, what are investors, what are you and the team interested in?
Yeah, I think it's probably going to be tweaks on the margins, so some improvement in those returns targets, and looking to get into more sort of high revenue, high margin businesses like wealth. But broadly speaking, stay in the course. So the last 3 years has simplified Deutsche Bank. They've managed to avoid too many missteps. The shares are really up. But it's not like it's a brave new world for them. Their price to book is just about coming up to 1, and that's probably going to stop them doing anything sort of too bold in terms of looking at M&A or kind of jumping into massive new business areas.
And you've talked about the relative success then the leadership and the bank has had over the last 3 years, and essentially this is just going to keep doing what they're doing with some of those tweaks. What are the key? If you were to point out and underscore the key challenges still facing Deutsche Bank, what would they be?
Yeah, I think it probably comes to the retail bank, which has long been a problem. And there, it's just struggled with margins, but also IT integration issues and stuff like that. And that has just been a perennial problem for Deutsche Bank. So I think that's going to be one of the big things is, can they effectively just clear through those problems and, again, find ways of boosting returns of that big unit? And then, intriguingly, there will be a management change. The current CFO is heading off, and the new CFO, Raja Akram, who used to be at Morgan Stanley, Citigroup, he is basically taking over and will be kind of overseeing this 3-year strategy from about next year.
OK, Tom Metcalf, thank you very much indeed. Bloomberg's managing editor for EMEA Finance, looking ahead, of course, to a big day for Deutsche Bank and what to zero in on. Meanwhile, S&P Global Ratings has lifted South Africa's credit rating for the first time since 2005, citing the nation's improving growth and fiscal trajectory. The company upgraded its assessment by 1 level to BB, 2 steps below investment grade. Bloomberg's chief Africa correspondent Jennifer Dabasaja joins us from Johannesburg. Jen, what did we hear from the agency? This is a big move, first time since 2005.
Yeah, really big move for the country, Tom. If we take a look at what we've seen over the past few years, there obviously has been stunted growth in this economy, especially when you think about what this country really should be growing at. But still, it seems like many analysts are pointing to the fact that at least it seems like S&P has a bit of a positive tilt when it comes to this assessment of where the country is headed. And they point to a number of factors. Of course, they look at this coalition government that's now just about 18 months into being here, their tenure here in South Africa. And a lot of what they point to are some of the structural reforms that we have seen this government move forward on, notably the state-owned power utility Eskom, which of course has been very detrimental to the economy over the past few years. They're saying that it's causing less of a burden for government revenue. And so it's seeming like at least this is a bit of a vote of confidence as far as some of the reforms are going with this coalition government. But still, many analysts that I've spoken to say that it might be a bit too early to at least cheer that this is, a fully operational and clear path ahead for the country. There still are a number of issues that South Africa is facing. There's corruption that has been a challenge. There has been not as fast as many analysts should expect as far as accelerating some of the economic reforms, and still infrastructure is not performing optimally in order to boost growth in the manner at which economy of South Africa's side should be performing at. And also we should point to the fact that unemployment is one of the highest in the world at just about 31.9%. So yes, this is a vote of confidence. Perhaps we do see other ratings agencies like Fitch and Moody's to follow soon. But still, many people are pointing to the fact that perhaps this lifts investor sentiment on South Africa and some of the reforms that we are seeing. And perhaps then we do see a bit of an acceleration from the government and from private operators here to continue on as far as some of the reforms that we've already seen instituted over the past year or so.
OK, Bloomberg's chief Africa correspondent Jen Dabasaja. Jennifer, thank you very much indeed. And ahead of this week's G20 meeting in Johannesburg, we're going to be hosting global business leaders at the Bloomberg Africa Business Summit. Among our guests tomorrow, JP Morgan's Daniel Pinto and the CEOs of the Johannesburg Stock Exchange and 91. So do stay tuned for those conversations. Coming up, as Bitcoin erases gains for the year, we're going to discuss all things crypto with Elliptic's CEO, Simone Maini. We're going to have that interview for you next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, after topping $126,000 in October, Bitcoin has fallen pretty sharply, briefly wiping out its 2025 gains. Bitcoin's total market value has plunged by about $600 billion from an October high. That is according to data compiled by Bloomberg. At this point, let's bring in the CEO of Elliptic. It's a British blockchain analytics firm for financial crime risk management. The CEO, Simone Maini, joins me now. It's a company that's backed by the likes of HSBC, JP Morgan, Santander, Wells Fargo, and Simone was previously at Deutsche Bank and Kroll, so with a rich experience in the financial sector. Simone, thank you for your time. I want to get into regulation. I want to get into what's happening in terms of stablecoin and financial fraud as well, which is what you focus on. But on the sell-off, what do you make of this? I mean, we've seen this story before. Is this just a repeat, or is this something more substantial that's happening when it comes to the crypto space that in the early part of this year had benefited from ETF inflows and expectations that there'd be regulatory benefits from the Trump administration?
Yeah, good morning, Tom. Great to be here. And yes, not great to see where Bitcoin is right now. But, you know, we've seen this, as you said, many, many times, and we will see it again in the future. I think for us, the key takeaway here is that price action in Bitcoin is no longer the thing that really tells us what's happening in digital assets. It's a much bigger story than that now. Of course, you know, headlines are often about the Bitcoin price. We're much more interested in the institutionalization of the space. We're looking at a number of different metrics, from stablecoin usage, tokenization, number of transactions, number of wallets, that kind of thing. Bitcoin is really now just one component of the full digital asset story.
Okay, so you have to take a wider lens to get a more accurate view in terms of what is happening. So for you, just to be clear, Simone, you don't think this significantly dents that more widespread and mature adoption of crypto as an asset class?
No, absolutely not. Of course, you know, we do look at other metrics, as I said. So we're looking at M&A. We've seen a significant M&A activity in the digital asset space this year. We've seen a number of extremely positive IPOs and continued for that trajectory into the next 6 to 12 months. So yes, looking at the Bitcoin price, that's one component, but let's look at the bigger picture.
And clearly, a key part of what you guys do and what you offer to some of those big financial names is transparency and monitoring for fraud within the crypto space. When you talk about stablecoin, Simone, how do you think about focusing on the risks around stablecoin to the broader financial system, the broader financial markets? What can you bring to play on that level?
So at Elliptic, really what we're helping financial institutions do is understand what's their risk exposure when it comes to interacting with digital assets like stablecoins, like tokenized assets. How do they make sure that when they are participating in those asset classes that they are not exposing themselves to undue risks, and if they are exposed, that they can do something about that. So that's the role that we're playing. It is critical infrastructure, and it's essential infrastructure for the ongoing adoption. What we're seeing, because of that trust and transparency that we're able to bring to the space, is that financial institutions are no longer treating this like an experiment, no longer just running pilots. We're seeing real infrastructure being built. We're seeing new payments rails being built on stablecoins. And I think it's fundamentally as a result of both regulatory clarity, but also that use case application of stablecoins really demonstrating improved efficiency, improved effectiveness in things like cross-border payments.
What are the implications then for those who do not have exposure and who aren't dabbling in cryptocurrencies, aren't investing, don't have a wallet, aren't thinking about DeFi in terms of some of the structural changes? Are there broader implications for people longer term as a result of some of these changes?
Look, I think essentially this is no longer an experimental technology or an experimental asset class. And I think that's why we're seeing so many of the large financial institutions participating in the space. As you mentioned, Tom, HSBC recently invested in Elliptic alongside previous investors, JP Morgan, Wells Fargo and Santander. And so those not participating really are at risk of being left behind. Standard Chartered CEO Bill Winters said a couple of weeks ago, all transactions will settle on blockchains eventually, and all money will be digital. The CEOs of Citi and JP Morgan have both said something very similar in recent weeks, and I think those not paying attention to that are seriously at risk of falling behind.
Well, where is the UK on the regulatory front? Are we at risk of falling behind?
We are certainly at risk of falling behind. We've seen some promising developments in the last few months coming from the Bank of England, but still overly cautious. I think what we have seen in the United States has been this real balancing of innovation and safely enabling financial institutions to participate in that space. And that's been a huge catalyst. It's been like rocket fuel for the industry. And we need to see the same happening in the UK. As I said, some initial positive developments, particularly around stablecoins, but some big caveats baked into what they're proposing. The crypto industry has been pushing back hard on those because we don't want to see the UK being left behind. We've been such leaders when it comes to things like fintech, and it really would be such a shame to see the UK miss out, particularly as a UK company.
OK, Simone Maini, CEO of Elliptic. Timely as we look at what's happening in the crypto space and the opportunities that could be afforded and the regulatory questions as well. We appreciate your insights. Thank you very much indeed. There's a lot more coming up. We're going to give you a preview in terms of the market moves that we've seen historically around the earnings story from Nvidia. We've got, of course, economic data out as well of the US through this week. Stay with us. It's coming up. This is Bloomberg. Welcome back. Well, with traders pairing some of their bets around expectations for December as a cutting period for the Federal Reserve, a reminder of some of the dissent that is brewing in the hallowed halls of the Fed amongst the governors. And you have seen, and that's the bar, the very thin white bars that you can see at the bottom of this chart right here, the number of dissents coming through from Fed governors at a time when we do have split opinions. We know that in terms of Fed officials. Rates are at 4%. The expectation that you could go in December is now just below 50% in terms of the traders' pricing around that. Of course, that could adjust on the data that we get out later this week. Non-farm payrolls dropping on Thursday as those Fed officials continue to be rather divided around how far and how fast the Fed should go from here and whether or not December is live. Let's flip the board and have a look at the earnings story when it comes to Nvidia. This is the big one for the markets, dropping on Wednesday US time, of course, and a reminder that despite the fact you've had a 40% run up, this is a $4.6 trillion market cap stock. Typically, shortly after the earnings, you actually get a drop in the share price. And this is the historical context then. On average, you see an almost 3% decline in the stock price 1 month after the earnings for Nvidia, even after a strong run-up. Those earnings dropping on Wednesday. Let's flip the board and have a look at the US consumer. You have the likes of Home Depot and Walmart earnings out later this week. So that gives us an opportunity to touch on the spending and the health coming through from the US consumer. And you have seen those gauges edge lower. So the US consumer does feel more challenged, according to the surveys and the data that we're seeing. We'll see how that reflects in terms of the earnings of Home Depot dropping on Tuesday and Walmart, of course, on the consumer on Thursday. Now, ahead of this week's G20, Bloomberg is hosting global business leaders in Johannesburg at the Bloomberg Africa Business Summit. Our TV coverage starts tomorrow. We're going to hear from the likes of JP Morgan's Daniel Pinto and the CEOs of the Johannesburg Stock Exchange and 91. Now, the opening trade is up next. This is Bloomberg.